Morning everyone, Simon Brown here, Fund Fridays. Today looking at ETF SENS announcements. There's a couple of points that I want to touch on today, portfolio fee, delistings, listings, etc. The questions we get a lot around, particularly the delisting part and particularly the portfolio fee part. So let's delve into this. Let's get a better understanding of what's actually happening here. And I'm going to do it live. I've been struggling with my internet in the last 20 minutes or so I've essentially gone and opened etc and got all the pages ready. I'm using the Signia iTrix World ETF, no particular reason except it's got the announcements that I need, and in particular because of the way they notate their portfolio fee. So we'll go and crunch that, and you'll see there's a fairly standard bunch of SENS announcements that you get from your ETF issuers. You got the listing of additional securities, you got your index constituent changes, you got distribution announcements for dividends, and then you got your partial delisting of same said securities, in this case the Signia iTrix Worldwide ETF. And if we run our down, I mean that's pretty much the only SENS announcements that we're seeing from them, and they come fairly thick and fast. I mean, when you're looking, this is just from this year, there's been more than an entire, about a screen load's worth of those SENS announcements. So let's go to the first one, and I'm just running them in the order that they've most recently appeared. And this announcement from 24 July, in other words, earlier this morning, and what they've just announced that portfolio in the Signia iTrix Collective Investment Scheme in securities, registered, blah, 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 all the legal stuff. Basically, listing of additional securities. Has issued and will list an additional 1.1 million of these ETFs with the commencement of business today at a price of approximately 38.67. Following the listing of 1.1 million, there will be 241 million of these. Now, what's happening is, remember that your ETFs have basically got market makers, and let's see if we can pull that up. Someone on behalf of Signia will be buying and selling in this ETF, making sure that there is a value going through, you're able to transact stuff. And what that means is that they need to, in order to sell into the market, well, they need to own that ETF. They need to have some. So they go and they've created, they will have a level at which they're like, oops, we're running low. Let's go and create some new units. Now, how did they create these 1.1 million units? Well, they went and bought all those underlying shares. And in the case of this, it's the MSCI Developed Market Index. So those underlying shares, it's about 1,600 shares. And they've gone and bought those 1,600 shares in the correct weightings. They pop them into the ETF, and boom, they've now got those ETFs available to be sellers into the market. Some of them will be what we call feeder funds. So the Satrix equivalent of this very same index is a feeder fund. So Satrix don't go and buy the 1,600 individual shares. They go buy the ETF on New York or Ireland or whichever one they're buying, and they basically stick it into their ETF. But of course, that ETF that they've bought have gone and done it and managed the process. So they've gone and created, because they've been seeing, in essence, demand. Now, demand for the ETF. Typically, in a normal share environment, is that increased demand will push the price higher. But in the case of an ETF, it doesn't do that. Remember, and was it last week or the week before, where we looked at, 2 weeks ago, we looked at market makers, and you will find that video on the Standard Online Share Trading platform, YouTube channel rather. And what essentially what they've done is they've been capping the price. So the price will stay at the fair value, give or take a little bit, but essentially the price is trading at that fair value, and they're able to keep it there because they're a seller on the one side. And as demand comes and they sell through this additional 1.1 million ETFs that they've purchased, they then have the situation where, cool, they've now sold down that bunch, and they go and create some new ones. Now, just a quick point, because they're creating in large blocks, in this case of just over 1 million, they're able to get better price efficiencies than unit trusts. And I remember a couple of years ago, there was huge debate around the price distinctions, etc., between the ETFs and unit trusts. The problem is, if I drop 1,000 Rand into my unit trust tonight, and they have to go and buy 1,000 Rands worth of shares tomorrow, and if they've got 40 shares, that's what, $50 a share. That they've now got, 25 Rand a share. My math was poor. And they've got to go and buy 25 Rand at each of the shares, which costs will come. Here they go and buy, they create the units in advance. But there is a flip side, which is sometimes they end up holding too much stock. And then they delist some of the ETFs. So here's a SENS announcement from the 7th of July. So what's that? 17 days ago, so just over 2 weeks ago. So just over 2 weeks ago, Signia found themselves in a situation where they actually had too many. Now, we don't know what they consider the ideal amount, but obviously Signia's got sort of rules in place, and they say to their market maker, hey, if your quantity is below that amount, we need to create more, and if your quantity is above that amount, we need to do what they call a partial delisting. And when this SENS arrives, a lot of folks then suddenly jump up and say, whoa, hang on, what's happening here? They're delisting ETFs, etc. No, they're just, in this case, delisted 400,000, still left them with almost 241 million. And they just want that perfect amount. And as I say, we don't know what it is. It'll be different for everyone. But they need to make sure that they have the correct quantum into it. So it's just managing that supply and demand. So we see those SENSes coming all the time, SENS announcements. Does it tell us anything? Sure. It certainly does. I mean, what it tells us is that, and let's go back to March, delistings, delisting, and then suddenly in June. So we can see that actually there was, people were selling. They were selling. We go back to January. There's been a fair trend of, well, in fact, January, that's weird. They did a partial delisting and a partial listing. I'm only going to delve into that. But in essence, there was a spate of delistings as the market was collapsing. Folks were selling their ETFs. Signia was buying them, and Signia was delisting. So it gives you a sense of what the trend is. But, as a long-term investor and with a market maker, it doesn't, to me, the market was selling. So what? I mean, we know in hindsight that the market was wrong to be selling because we got an incredibly strong bounce. In fact, 25 March, 23 to 25 March, depending which market you're looking at, was actually the low, and yet people were still selling into April, still selling into May, and then finally starting to buy in later May. So it tells us a bit, but it's not, it's not something we can use for trading or anything like that. The other announcement that comes is obviously they're a collective investment scheme. They're holding other shares, or it might be bonds, or whatever the case is, depending what it is that they've got. In this case, this is an ETF, and they're holding the particular shares. And what happens is the weightings change. So this share, TUAS, I don't know how to pronounce it, TAUS, and I have no idea what they do. They had a weighting of 0.0002%, and that's not unusual for an ETF of 1,600 odd shares, for some of them to have truly tiny weightings, and the new weighting is 0. In other words, this ETF has been kicked out of the index effective 15 July. You will see, so Tesla's probably coming into the S&P 500 index, and suddenly you'll see the announcements for that, for those ETFs to say, hey, we've just now included Tesla into it. Just a quick point on Tesla. So a bunch of the active folks are out there on the Twitters and my WhatsApps and emails and everything saying, you're buying Tesla at a 300 PE, etc., etc. Yeah, I mean, I don't own the S&P, but I 500 directly. The Ashburton 1200, one of the 7 constituents of that is the S&P 500. So, yep, I'm going to own Tesla shares. You know what? I'm quite cool with that. I mean, so for some perspective, Amazon, when it came into the S&P in around 2004, was at a PE of about 150. And that's been a great investment in my little ETF or that index over the time. That's what passive is. And you know what? Maybe Tesla crashes and burns and it gets booted out and we take a hit on it. That's what passive is. That's what ETFs are all about. At this point, I don't mind having some Teslas. And if it exits, hey, that's the rules. I don't mind either. A quick question on what is the size to get into the S&P? Fair question. I don't know, but also the S&P is not just market cap. They also want some profitability. When the way Tesla gets in is twofold. It's got the market cap, but it also now has 4 quarters of profit. We can debate lots about it, but it's there. It's, the SEC, Securities Exchange Commission in the US, happy with that profit, and then Standard & Poor's Dow Jones, S&P Dow Jones, sticks it into the S&P 500 index, and therefore index funds the world over that track the S&P 500 or the Ashburton 1200, which has as a subsect. It might then, the question then someone asks is, does it go into the worldwide, which is the MSCI developed? I don't know, honestly not sure, but quite probably. So, Tesla's going to be popping up in our investments all over the place, and that's how passive investing works. And then the other SENS announcement that comes out is around the ETF distributions. Now, this ETF pays dividends twice a year, and they're talking where was it coming from, etc., all bits, the dates. If you held it on the 14th of July, you would have received that dividend payment 6 days later on the 20th of July. Record date is just the semantics, and the X date is literally the day after. So the last day to trade to receive is the 14th. On the 15th, then, the ETF will drop by whatever that accrued dividend the payment is going to be. And here's what really gets people. So you've got gross dividends, which is, let's call it 47 cents, some foreign dividend withholding tax of 8 odd cents. I'm going to come back to that. Interest expenses, portfolio cost, total dividend of 25 cents. And how they got to that was the 46 cents less portfolio, net dividend, dividend withholding tax, boom, distributable income of 25. Now, a couple of things let's quickly touch on here. The first is foreign dividend withholding tax. If you are in a tax-free account and you hold this ETF, you won't pay that 6.7 cents South African dividend withholding tax. That will not be withheld because you're in a tax-free account. However, the foreign dividend withholding tax you do pay. Because truthfully, and they tell us down at the bottom here what the different geographies are, where it came from, the IRS and the other different geographies quite simply don't care about our tax-free accounts. And there is a dividend rebate that comes back, but not all of it gets rebated back, and therefore there is some dividend tax that we don't claim back. It's moderately small, although truthfully, it's actually more than the SA dividend withholding tax. So it's not insignificant. But the one that gets everyone very, very jumpy is this less portfolio cost. And in this case, no, I don't care about your Powerball. Less portfolio cost, 13.4 cents. Now let me pull up a calculator here. And why did my calculator go to the wrong screen? Come on, calculator, you know where I am. In fact, there's my calculator. That's why. Okay, let me go back to that screen. Let me go over here. And pull my calculator across into there. My calculator's not happy at all. So I'm going to have to do this manually, which is some fun and games. Oh, I know why. I can fix that problem because my Brave browser is full screen. And it's like, well, if you're full screen, dude, you can't have a calculator in front of it. And then let's move that to the mechanics. Okay, so I finally got a calculator. 13.4 cents, and then people divide it into the dividend. Now, which dividend do you want to divide it into? The 25-cent dividend, divided 25-cent dividend means that your portfolio cost is 54%, and people freak out. 13.4, let's divide it into the total dividend, which was, let's call that 47, and that comes out at 28.5%, because of course, to get to times 100. And people absolutely freak out. The question is, what is that portfolio cost? In essence, that is the fee that goes to Signia for running this portfolio. We typically express it as a total expense ratio when we express it as a percentage. And the mistake that people are making, and I have had my Twitter stream and my inbox flooded this week, people who hold in the Signia ETFs and looking at this portfolio charge, and particularly because some of the issuers do it line by line. Some of the stockbrokers are doing it line by line, so it pops up. And if you hold a bunch of these, it's suddenly a large amount of money. If you hold 1,000 of these, 1,000 times 13 cents, that I was going to say is a bottle of wine. No, it's not, because you can't buy wine, but you get the point. The mistake people are making is that this is essentially Signia's fee, and what you need to do is you need to take that 13.4 and you need to annualize it, and then you need to plug it into the current unit price, because that is not a portfolio fee that's relative to the dividend. That is a portfolio fee that is relative to the entire ETF. So let's go and get a portfolio price. That ETF is, let's call it 38.56. It's going to be a little bit out probably because truthfully this dividend was paid a little while ago. But what did we agree that the amount of dividend was? 13.4 cents. So we take 13.4, we multiply it by 2 because we need to annualize it, and they pay a biannual dividend twice a year, and we divide that into the price, which is 38.56. We multiply by 100 to get a percent, and we have a 0.695. Let's call it a 0.7% expense. Now, the total expense ratio on this ETF, if memory serves, I think is actually 0.67 or 0.68. It's in that ballpark. And the reason we're slightly out is because this price is last traded price, but this dividend was relative to, excuse me, we should focus on the issue date price, and issue date was 9 July. So the dividend, that portfolio fee looks terrifyingly large when you do it relative to what the dividend is. But when you take it and you annualize it and you work it relative to the unit price, boom, you suddenly get to your total expense ratio. And that's exactly what it is. It is your expense, which goes to Signia, which A, covers their costs, and B, makes them a profit. Now, what makes Signia stand out is that the other ETF issuers don't do that. At least last time I checked. Let's go see if my internet is better. Mark, I'm having internet issues left, right, and center. I couldn't load anything. My Twitters wasn't working. Nothing was working. We go to news, and then my internet goes slow again. It doesn't help that I'm streaming dozens of things at the same time. David, do additional listings dilute the dividend? No, because they've literally gone and bought those shares. So what it means is that they will receive extra dividends because they own extra shares. So the dividend that we're getting as individual relative to the unit will remain exactly the same. Michael, comment in the sense that SA tax will not be deducted due to foreign tax paid. Yeah, so I mean, there's offsets. We've got tax treaties with pretty much all of the countries out there. The problem is last time I checked, and that was sometime last year, is we hadn't changed, because remember our dividend withholding tax was initially 15% and then it went to 20%, and so we need to update those treaties, and those treaties haven't all been updated. So here's the Satrix distribution finalization announcement for the quarter, and Satrix pays quarterly dividends, and they just don't give as much information. And that's where Signia finds itself in a whole heap of pain and the like. So dividend interest, etc. Gross is 44, net is 35. Now, Satrix hasn't mentioned the fact that they're actually got any fee, but they took their fee. They are taking, the ETF issuers are taking their fee out of the dividend. It's just the simplest, easiest way to do it, as they pay the dividend. In the case of this ETF, it's on a quarterly basis. On the Signia, it's a biannual. They grab it there. Interestingly, they do have some foreign dividend from Great Britain, and that's because they're dual listed, and a lot of those dual listeds are actually inward listed to South Africa. So British American Tobacco is in the top 40, but actually it's a London primary listing. Anglo American, same story, a whole bunches of them. Used to be Old Mutual, but no longer. And then local interest, etc., because of course that goes to income, a whole different story. But that's why the Signia then gets a whole lot of hate for it, because folks see it and they're like, they think that, and in fact they go all after Magna Vagisco on the Twitters, accusing her of stealing money. It's actually, Signia is being more transparent, but we're not understanding what they're showing us. Where's the SENS icon on the web trader? Good point. I will show you an example of a SENS icon. So this is just my top 40. These are all the top 40 shares. MTN issued a SENS this morning, so it's that little one there. You will see it on watch lists. Now, you're not going to see it on this watch list much, although I do have some ETFs and stuff, warrants, etc., that might then kick out. But the bigger story is that if you've got a watch list, you're going to see it on that watch list. If I then go to this setup here, MTN, and you can see the SENS is coming through there. I've also set up a SENS page here. And if you want more on how I did all of this, go to the YouTube channel. It's all on the YouTube channel. Explains all, makes sense, etc. But particularly to your watch list, it's going to pop up there. And if you click it, it'll bring up all the SENS. But what they're showing you is that this stock today has issued a SENS announcement. So Vodacom also had one. The sales of shares. Investec Limited and PLC has both had. And Woolies. What is Woolies telling us today? A trading update from Woolies. That came out crack of dawn this morning. And the market, well, Woolies is down 2.4 in a market that down 1.3. Market didn't much like at all. EJ, I know you were asking me about Quantum Foods. And here is an update. So who is this? Old Mutual has disposed. Allan Gray has disposed. Aristotle Africa has acquired. Now holds 31.05. So this is, as which was announced earlier, this is the Silverlands 2 company, which is Silver Street, which is a Luxembourg-based company that invests into Africa Agri. They have now finally done their deal. And the question was, we've been seeing the block trades go through. It's now happened, and Silver Lakes now owns 31.05. Ultimately, I thought they actually wanted 32, so they might go pick up the other 0.95%. EJ, I remember the email you sent, and I don't remember the exact details of the question, but I know you were asking about Quantum. And I think part of the question was, how do you spot these sort of things before they happen? And the short answer is you don't really. They're almost impossible to spot in advance. I mean, the one is a bunch of people held the stock simply reasons that it was, they just liked the business. They considered it to be an attractive investment case, and certainly there was an argument for that. But a lot of other folks could have traded it. So there were essentially kind of two breakouts that were happening here. And let me change these lines to a better color and to a thicker line. And let me do the same with that one, a thicker line and a better color. So you can see that there was fairly strong resistance around the 4 rand, and more recently fairly strong resistance about the 365. Those two breaks were truthfully both quite significant, and then that corporate activity started to happen. What the Quantum story more than anything was just a case of the speculation that there was going to be a takeover bid, and there was. I mean, Country Bird, who bought the Zeda stake, and this all started back on June 16 when Zeda did their transaction there, and announced it to the market. So 16 was a holiday, so it would have been 15 or 17. So at around the 4.50 Rand, and they sold to Country Bird. And the speculation was, would Country Bird make an offer for the remaining? And they did. They approached the board with an expression of interest, and they then withdrew that expression of interest. But then all the excitement came. Then suddenly everyone wanted some. Directors were buying. Astral was buying. Silverlands was saying they wanted a stake. And we saw it all coming via the different SENS announcements. And it just went absolutely crazy. And I saw the craziness happening around the 5-6 rand, and it's like, how high can it go? Short answer is not a clue. And then it seemed to settle at 7. Those trades up at 11.57 were, frankly, just crazy. Were just absolutely insane. Now, a couple of things around that. There's no fundamental reason for the stock to have boomed. I mean, let's take that aside. The investors in this business would tell you the fundamentals are brilliant and that the share has got a net asset value of around 9 rand. Okay, I mean, let's take those 2 points as given. The bigger story here is that the spike was on expected corporate activity. That was all it was about. And the 11.57, whoever bought shares at that price is ruining the day. What we have here is truthfully a kangaroo tail, which is a massive reversal pattern. And what you're seeing here is someone's definitely happy to pay up. But the low today is 5.80 rand. They're selling. My sense is, and I was people contacting me at this point in the equation, I was saying your stop loss is around 7 rand, 6.50 rand if you want to be brave, and then trailed it. And you, in that case, would have got stopped out on this day, probably at around the $10 or so, depending what your trail was. My sense is, if anything, there's a head and shoulders forming here, and the stock is probably going back to a couple of rand. The corporate activity is now not happening. So, yeah, it's overs and tickets. Can someone who is not Michael, a Standard Bank customer, invest in their tax-free investment account? No, you either need to have a Standard Bank internet banking account and therefore have a Standard Bank account, or you need to have a standard online share trading account. And if you don't have one of those, you can't. They might in time, and I think we might start seeing the banks do this, where they spin them out as separate standalones. But at this point, no. At this point, not. There are hacks to it. I mean, Standard Bank's got a cheap account at 5 rand a month. You could open a 5 rand a month account, get internet banking, and then you could open a tax-free via internet banking. EJ, pleasure. I hope that was answering your question. Yeah, I mean, quantum's one of those crazy things that happen, and in hindsight, it's easy to see that spike to 11.50. I didn't see. I really thought 7 was about the resting place. I didn't expect it to go a lot higher. And light volumes. I mean, not even 100,000 rand traded so far today. Remember, Mondays, Wednesdays, Fridays. Mondays is Dinero and myself talking markets. Wednesdays is Know Your Platform. Fridays is ETS. It'll flip to Fun Tech Fridays from August, which is in 2 weeks' time. If you've got things that you want me to cover, Simon at Just One Lap. Simon at justonelap.com. Alternatively, you can hit me up on the Twitters, Simon PB, Facebooks. What am I on Facebook? Simon Pateman Brown. Heck, LinkedIn's. I'm everywhere. If there's particular things you want me to touch on, whether they're broad subjects, questions such as EJ mailed through to me, etc., you folks are more than welcome to, and we'll pick them up and discuss them. But for now, we'll park that there, everyone. Have a great weekend. Stay safe. Wash your hands. Wear your mask. It is still crazy out there. Cheers all.